Well, good morning, and we're just going to give it a couple of seconds as we have very large numbers joining us here this morning. Okay, so good morning and welcome, and thank you for joining us. My name is Joanne Keane, and I'm the CEO here at LIA, and I'm delighted to welcome you here to with such large numbers to the session on practical implications of minimum competency for credit unions. And this is building on our last event relating to minimum competency for credit unions. Before we begin, just a couple of points to cover off. This is a CPD event awarding 1 hour, and we will automatically log that on your behalf within the next 48 hours. As always, you must attend for the full duration of the event to gain that magic hour. Topics today that we will cover off include an in-depth analysis of minimum competency for 2023, governance and operational adjustments, product design considerations, member services and complaints handling, and gap analysis and compliance strategy. And finally, there will be a Q&A session at the end of this presentation. We expect lots of questions. So as we go through the presentation, if you wouldn't mind putting them through the Q&A icon at the bottom of your screen. We may not get to answer all of them, but we will follow up with you for those who we haven't got through after the session. So now let me introduce you to our speaker for this morning, who I'm sure many of you are already familiar with. Mc Cormack works with Internal Audit Services of the Irish League of Credit Unions. She's an audit manager responsible for planning, developing and rolling out audit programs, and has a special interest in governance, lending and operations. Prior to working with IAS, Egypt began her career with AIB, working in personal and business lending and then into business development. And in 1997, she got the credit union bug, first as a volunteer teller and quickly progressing to an elected board member, where she served as honorary treasurer and vice chair before moving into a CEO role from 2004 to 2010. She later changed focus to work with credit unions in governance and the development of risk management frameworks, and has also lectured for the League and has been involved in developing some courseware for them. So without further delay, Ida, you're very welcome, and I will hand it over to you.
Thank you very much. Good morning, everybody. I'm just going to say, first of all, just to say thank you very much for coming on this morning. And as you'll notice, I have a head cold, and so I will speak more slowly, and hopefully it won't distract from the content from today's webinar, which hopefully you'll find very interesting. I would like to thank Joanne for inviting me to give this presentation this morning, and to all the team at the LIA for their help and support. So as you can see, if we move on to the next slide there, please. So as you can see there, we have a lot of content to get through, so I'm going to just jump straight in and get started. So if we move on to the next slide. So this is just to say that the key objective of I suppose, central bank over the last number of years is to ensure that an appropriate and standardized approach and level of professional competency within the financial services sector. And this has been mainly achieved by the rollout of the minimum competency requirements and the fitness and probity regime. The aim of the minimum competency requirement is to ensure that an acceptable level of professional competency is held by those involved in services and products within scope, which will include credit union lending and term deposits from the 1st of October this year. These requirements currently apply to credit unions who provide mortgages and act as retail intermediaries, so those credit unions are well used to the regime and how it operates. The recent changes to the Minimum Competency Code, the fitness and probity requirements, the new individual accountability regime, and the recently enacted Credit Union Amendment Act represent some of the most significant changes to the credit union landscape and regulatory landscape in recent years. So it's a lot of changes within a very short period of time for credit union boards and operations to get their head around. So just on to the next slide there, please. So what are minimum competency requirements? They require the credit union, so it's the credit union, have to ensure that their relevant persons are compliant with the minimum competency code after the 1st of October of this year. Therefore, after the 1st of October, any individual performing a specified activity must meet the requirements regardless of whether they are an employee, a volunteer or a director, or will have commenced the relevant qualification, which must be attained by the 1st of October 2028 at the latest. The next slide, please. So after the 1st of October, any individual providing information to members on lending and term deposits will be required to hold or be in the process of attaining a recognised qualification for these products. So in scope activities include talking a member through particulars of a loan or term deposit product, including accounts with any level of arrears or pre-arrears, so this could include your counter staff, taking an application for loan or term deposits, including for temporary arrangements and rescheduling loans, so tellers, credit control officers, for example. Deciding on a loan application, so this could include your tellers who approve loans within shares. So it's important to remember that even if you're approving a loan within shares, you still have to meet the requirements. It also includes obviously your credit officers, your credit committee, and the board if they wish to retain involvement in lending and term deposits. Overseeing or supervising the loan or term deposit process, for example, your head of lending, the supervisor, your operations manager, branch manager, your credit control committee, of course. Loan or term deposit new product development. So this would be your management team or a new committee specifically set up for developing new products, which could include some members of your board. And then member complaints, and these are complaints regarding loan and term deposits. So it'll be your complaints officer and your committee. So they all are now within scope. The next slide, please. So this slide just goes through the new CUCF control functions that central bank have introduced in line with the MCC requirements. So you can see there, the CUCF3 is about giving advice to members. Number 4 is about arranging or offering to arrange a service. Number 5 is assisting a member to make a claim under contract of insurance or reinsurance. And then CUCF6 is determining the outcome of any claim from insurance. And number 7 is the direct management or supervision of people performing 3 to 6. And then number 8 is adjudicating any complaints in relation to these services. Now, I will go through the fitness and probity requirements later on in the presentation, but that's just to show the link between the minimum competency requirements and fitness and probity. The next slide there, please. So I'm just going to go through the governance arrangements in relation to loans and the impact the MCC has on this. So the MCC requires that all persons who are involved in any of the in-scope activities be qualified or be in the process of attaining a qualification, and therefore all members of the credit and credit control committees will need to meet these requirements. It will be very difficult to ensure that a full board are qualified on an ongoing basis. Therefore, the recently commenced Credit Union Amendment Act permits credit unions to determine an alternative loan decision process for officer loans and for loan appeals, meaning that the board can transition away from direct involvement in the lending process and therefore will not need to meet the requirements. So it's very important to understand that the new Credit Union Amendment Act has done away with the special committee for officer loans and for loan appeals. And it can now be done by a process as determined by the credit union. It's also very important to remember that as the credit union continue to be the deciding body for related party loans, this committee will require suitably qualified members. But the requirement to review all loan applications has been removed by the Amendment Act, and once this phase is commenced, which will be either this month or in July, the credit committee will no longer have an oversight function. So these committees could be made up of hybrid committees, to be honest, once they comply with Section 37 and the third schedule of the Act, so which is that they have to have at least 3 members on the committee. The same officer cannot sit on the Credit Control Committee and the Credit Committee, and credit control officers cannot sit on any of these committees. So it is quite restrictive, considering all these people have to be qualified. So where the board transition away from direct involvement in the lending process, there should be sufficient second line and management reporting to the board, providing relevant information to ensure that the board have sufficient oversight. And this may require amendments to second and third line work plans. So you moved on to the next slide. That's slide 7, yeah. So just in relation to this one here, as the minimum competency requirements includes the loan inquiry stage right through to the issuing of the credit agreement as a legally binding contract. It is anticipated that this will have a major impact on operations unless sufficient numbers of staff, including tellers, are qualified or are on their way to being qualified. Because it's often tellers who deal with the initial loan inquiries and draw down the loan at the counter and sign and issue the credit agreement, which is the legally binding contract. It would be common also for members to discuss any issues they're having with their loans, any initial inquiries with tellers at the counter, such as any pre-arrears, so they may go into arrears, or if they are having late payment, they're making a late payment or paying off arrears. And again, in order for this to continue, tellers would need to be suitably qualified. So slide 8, please. So the expectation is that the vast majority of credit-related roles will become primarily operational. I think that's a given at this stage. This could put significant pressure on staff resources, as a minimum of 3 are required to fill each of the credit and credit control committees. So that is 6 qualified staff members, and none of these can be a credit or credit control officer. And so depending on the credit union size, there are usually a minimum of 2 to 3 credit officers and 1 to 2 credit control officers. So that is between 8 and 10 qualified staff at a minimum. We also need to remember that the loans within shares now must be approved by qualified staff. So unless tellers are qualified, these loans will now also have to go to the credit committee or to the credit officers. We are aware that there are a number of credit unions who do not have sufficient first-line staff to cover these roles and may have to depend on their in-house, and I stress in-house, second-line staff who hold irrelevant qualifications to these committees, along with a qualified board member or volunteers if there are any. And I'm aware some credit unions do have qualified board directors and do have some qualified volunteers, and that will take the pressure off. For second line staff, this could impact on their objectivity and independence from their main statutory role. So credit unions need to ensure, where they do need to rely on second line to fill committees, etc., that a full risk assessment is completed and the risks identified are managed to ensure sufficient controls are in place. There also needs to be sufficiently qualified individuals to cover leave, both planned and unplanned. And this is why the succession planning is so important in this context. And just the next slide there, please. So aside from the loan process from inquiry to drawdown, the following processes also require suitably qualified individuals: term deposit inquiries, account opening, etc. Small payments upon death, where it includes a term deposit account balance. Just to note, this no longer requires board approval, as this was amended by the commencement in February of phase 1 of the Credit Union Amendment Act. So the board approval requirement has been removed. Claims involving loans, for example, the LPLS, as loan protection covers permanent incapacity. So it's also an insurance product rather than just a life assurance product. The complaints officer, the complaints team, or the complaints committee handling complaints for loans and term deposit accounts, any loan appeals, and by the process as determined by the credit union, and then the person or body in direct management or supervisory role of individuals in scope. So they now all have to these processes now all have to be reviewed by operations to ensure they have sufficient staff, qualified staff to meet all of those roles. So slide 10 there, please. So I'm just going to talk through credit control. So as credit control officers assist members with temporary arrangements, rescheduling and arrears management, they too need to meet minimum competency requirements and be suitably qualified. So in scope activities with credit control would also include discussion or queries with members regarding out of order overdrafts, missed payments, extra payments, arrears or pre-arrears. If any of the credit control work is outsourced, and I am aware a lot of credit unions do outsource some of their credit control work, they need to ensure that the MCC requirements are met by the outsourced function, and this should be addressed as part of the tender process if renewing if renewing getting a new provider, or as part of the annual review process. So they should be the outsourced function should be reviewed annually by the board. But in any case,
Ida, could I just ask you, just to sorry to stop your flow there, but just to say, first of all, yes, we will be making available the slides, but also somebody has asked, could you repeat your point about the LP and LS? Is there a requirement for qualified staff to explain to members?
Yeah, so LPLS insurance covers permanent incapacity. So MCC is for insurance products, not assurance. So LPLS is mainly for life assurance. So if the member dies, their loan is cleared. But it also covers the permanent incapacity of a member. So that's insurance. So therefore, any person who is involved in that needs to be qualified.
Okay, great. Thanks.
Okay,
Sorry about that.
that's
Thank you.
no problem at all. It's no problem at all. Yeah, the more you think about it, the more you realize that the impact is going to have
How
on
vast.
operations. Yeah, yeah.
Yeah,
So your
huge.
insurance officer really should be qualified.
Okay, great, great. Thanks, Ed.
Okay, I'm not sure I was not. Oh yes. So if your credit control work is outsourced, the MCC requirements need to be addressed as part of the tender process and as part of the annual review process if already in place. But in any case, it must be done before the 1st of October to ensure full compliance. However, sorry, now I have to lose my. Sorry now.
You're fine. Take your time.
However, However, this would not include a tracing agent or a summons server, as these are not deemed to be in scope activities. So if you have somebody doing your tracing or serving summons, that's fine. They're not in scope.
What about somebody on the insurance again, Ed, about the RIP claims? Are they in scope?
So if a member has passed away, that's life assurance. It's
Yeah,
covered by assurance. So it's insurance.
that's in scope.
It's life. If you go back up to the slide, and I can't remember which slide it was, which shows the CUCF functions.
Yeah. So Katie,
Um,
if you could just move up,
so
to that
slide,
slide.
just back up,
Up,
keep
up,
going,
up. The
keep going.
table.
Yeah, the table we had there, keep going. It's up near the top.
I think it's
If you
about the
keep going back
third
up,
slide. There
there
we
we
go.
are.
Yeah.
Now, see therefore it says insurance. So if it's number 5, assisting a member of a credit union in making a claim under contract of insurance. So if a member, they're still alive, so it's insurance, is making a claim under permanent incapacity, and a lot of credit union members would make these claims, that the person assisting them must be qualified. And also determining the outcome of the claim arising under contract of insurance or reinsurance also needs to be qualified. So it's the first one. It's number 5, assisting a member of a credit union in making a claim under contract of insurance or reinsurance. The
Great.
determination is done by ECUs. That's not for us, and they're qualified. It's for the credit union perspective, from operations. It's making a claim under a contract of insurance. So if the member has passed away, it's life assurance that you're calling on the life assurance side of LPLS. If the member is still alive making a claim, it's the life insurance. Does
Great.
that make sense?
Okay, sorry, we've broken up your flow. Keep going.
That's keep
Sorry.
going. Yeah, that's no problem. It's no problem. Let's see which slide we're on now.
You were up, gone through that you had been on the operational.
Oh, yeah, credit control. That's where I am.
Yeah, yeah.
So the credit union, so I'll continue on where I was. So a credit union must satisfy itself that any person performing the control functions as an outsourced function, they must comply with fitness and probity standards, and those persons have agreed to abide by the standards. So the outsourced service provider should ensure that should furnish the credit union with sample documentation as to how compliance with the standards is adhered to. And the one that you really need to be cognizant of is that the credit union remains ultimately responsible for the conduct of the outsourced entity. So that ultimately lies with the credit union. So you must ensure that they are all qualified, that they are operating within the scope of the minimum competency requirements. And I suppose to address this, we would suggest as a matter of best practice that a sufficiently detailed board review template is documented and in place specifically for in-scope outsourced functions. And this will assist with ensuring an ongoing standardized and compliant approach. And the next slide there, please. Now, I realise that at present not many credit unions offer term deposit accounts. However, they may be more attractive in a higher interest rate environment. And as such, if any credit union would would be open to offering these accounts to members in the future, they need to ensure that a staff member holds or has commenced the relevant qualification prior to the 1st of October, as after that date, they would need to be supervised by a suitably qualified person. So if no one is suitably qualified, there's no one to supervise. So term deposit in scope activities includes giving advice to the member in relation to provision of term deposit, arranging or offering to arrange a term deposit, and supervising person and adjudicating on a complaint in relation to a deposit account. Just on to the next slide there, please. So as the slide states, the body or person with responsibility for member complaints regarding loans and term deposits needs to meet the MCC requirements, and as such, it's expected that member complaints will become an operational function. And then the next slide, please. So this is about the impact on product design process. So the design or development of in-scope products requires at least one key person on the appointed committee to meet the required professional standard. It's recommended as a matter of best practice and to ensure a standardized and compliant approach that a product development policy is documented along with the establishment of a product development committee, which can consist of some directors once one key member of the committee meets the requirements. The committee would generally consist of the management, such as CEO, compliance officer, the risk management officer, and head of finance, along with a member of the board. It is the development of products and services that are in scope. So once this is a separate function and the new or revised products or services are approved in line with requirements, for example, by the above mentioned committee, policies can then be approved in the normal manner, as policies are the framework document to support the implementation of such products and services. So the board will be reviewing and approving a policy in scope for in-scope products, which has been updated and approved by the new product development committee. So the next slide, please. This is about completing the gap analysis. So it's imperative that a gap analysis is completed in a timely manner. It should note all roles that are now in scope for minimum competency and fitness and probity requirements. It should determine the gaps in it should be used to determine the gaps in filling these in scope activities, such as where there are sub offices or branches for credit unions. You need to ensure there are sufficient qualified staff to deal with in scope activities, including discussing any level of missed payments on accounts, loan inquiries, right to credit agreement, or discussing or opening a term deposit account or inquiries regarding early withdrawal of funds, for example. The person doing these tasks need to meet the MCC and fitness probity requirements. And as I said already, the person who deals with loan insurance, including assisting a member with processing a claim for incapacity, will need to meet the requirements. And is the UCF, so CUCF Role 5. Approval of LPS claims on small payments of debts where it involves a term deposit account. And again, this is the small payment upon debt has been removed from the board. It's no longer a requirement of the board, and that was changed under the Amendment Act and was introduced in February. The make up the credit control, complaints, membership and product development committees, if the product development committee is in place, are also there, and any person in a supervisory role, as we already stated. So then these are all the gaps and all the roles that need to be identified to see have we sufficient qualified persons, where are the gaps and what we need. And then we'll go on to slide 15 and we're going to talk about developing a plan to address these. So the credit unions need to map out a plan to address any gaps identified. For directors and volunteers, it is imperative if the board wish to remain involved in scope activities and where it is decided to transition away from these roles, the new operational arrangements need to be put in place. So if the board decide they want to remain involved, then they need to be sure they get qualified. And if not, then they need to ensure there are sufficient staff and sufficient numbers for when they transition away to an operational function. And that's a big decision for boards to make and how they're going to manage that, particularly for smaller credit unions. And that needs to be looked at now. As part of the minimum competency plan, credit unions should determine the revised framework for new lending and term deposit processes, such as the make of the credit control committees, the bodies or individuals responsible for complaints, term deposits, new products, and revise the terms of reference for all of these. And then our roles and responsibilities also for in-scope staff. The new process for the approval or decline of officer loan applications and loan appeals needs to be determined. So once Section 37 of the Credit Union Act is amended by the commencement of the relevant phase of the Amendment Act, which is either later this month or could be July, once that is introduced, then the officer loans and loan appeals is removed from the board, and that the process must be determined by the credit union. And that should be done as part of this plan to ensure there's sufficient qualified staff to do it. The plan should also clearly identify those roles. Sorry, just before I go on, it may be that you decide that the officer loans and the loan appeals will form part of the TOR of the credit committee, which would be fine. But then you need to ensure if they are the ones doing the approval, that if there's an appeal, that there needs to be another person's for the appeal for those loans, for office loans and related party loans. There has to be a separate process for those appeals, just to highlight that. The plan should also clearly identify the roles now within scope of minimum competency and set out the steps to ensure that individuals in these roles are either qualified or have a clear pathway to attaining the qualification. So really, most staff should have signed up at this stage and be on the way to, to attaining their qualification. Or you might be doing it in phases, and you might decide, X amount of staff doing it now, X amount of staff starting, at the next quarter, and doing it that way. But whatever way you're doing it, you need to ensure that you have sufficient numbers of staff that are ready to hit the ground running on the 1st of October. They don't have to be qualified, but they have to have started their qualification.
I need just to say there, for the LIA members, we have a credit union relationship manager, Brian Dunphy, who's been out to many of you at this stage already. But certainly one of the services we're offering is just so that he can go out to you and help map where people are in terms of qualifications, where they need to get to, so that there's a clear plan in sight. So, if people have got those queries or they need us to come out, and we'll do that with them, and you just email in, we'll put that slide details at the end of this presentation. But it's very important, as you say, that people get stuck into now knowing what they need to be doing in terms of qualifications, so they don't get caught out. As you say, if there's a credit union with nobody potentially qualified or nobody to supervise,
Yeah.
there's a major problem.
Yeah.
Yeah.
That would be for the term deposits. That would be a huge problem for credit unions if they decided, say next year, they want to do term deposits and nobody qualified. That's a huge,
Yeah. Okay, sorry for interrupting you again.
No problem at all. So just in relation to the plan, we would recommend that one-to-one meetings are held with staff or individuals who will be in these roles, discuss the requirements with them, and where relevant, set out a pathway to attaining their qualification, and just to put their minds at ease and go through what supports are available for them and all of that. And setting up maybe study groups, whatever, just to give some staff and some individuals might be quite apprehensive about doing qualifications. It's important that their minds are put at ease, and that they're you do have one-to-one meetings with them where things like this are discussed, because they might not feel comfortable putting their hand up at a staff meeting to say something like that. I suppose credit unions who are regulated intermediaries or for insurance or for providing mortgage should already have policies in place regarding qualifications, and those who will be in scope for the first time should be provided with copies of these relevant policies and procedures as well. As part of the MCC plan, the board need to ensure that a detailed budget is documented and approved by the relevant body, with regular reporting of same to the board to ensure they have sufficient oversight of the use of this budget. And that's really important too, because you need to ensure there's enough money set aside to cover the costs, particularly for the smaller credit unions. If we go on to the next slide, please. The plan should also detail the control functions assigned to each role and the individuals who will be assigned these controlled functions. Again, some credit unions already have this in place where they provide mortgages and sell insurances, but it still needs to be revised to take account of the recent changes. As part of this, there should be a documented standard procedure for fitness and probity due diligence, taking account of the central bank guidelines on when to check or out and carry when a check is sufficient, or when self-certification is sufficient. Also, what is considered to be a trigger to carry out a check instead of self-certification should also be included, along with an escalation process. So in short, credit unions must satisfy themselves that the persons performing the controlled functions comply with standard fitness and probity standards, and those persons have agreed to abide by the standards. This also applies to outsourced functions that are in scope. Succession planning will need to be revised to take account of any changes to governance and operational practices as a result of recent changes. It's imperative that succession plans take account of planned and unplanned leave, segregation of duty, and conflicts of interest. Data protection obligations also need to be considered, including providing control function role holders with information on how their data will be used, and permission is given for carrying out any checks. DPAA should already be completed for the fitness and probity process for all credit unions and has been in place now since 2012, but it should be reviewed to ensure it is sufficiently detailed along with information registers. The next slide, please. Slide 17. Yeah. So credit unions are required to maintain an up-to-date minimum competency register. It needs to record all officers, voluntary and staff who are involved in any in-scope activity. A listing of each officer's qualification and CPD membership status is to be documented in the register, including a section for officers who are in the process of attaining a suitable qualification. So it'll be important that you have a separate tab for that, noting the date they started, how many exams they've done, when they're expected to finish, if they've had to repeat exams, all of that needs to be documented. So the ongoing CPD membership status also needs to be included in the register. And I suppose I would certainly recommend that the register is sufficiently detailed to serve as the required fitness and probity register as well. So that we just need to include the individual's various CF roles and certification process. So that was very important that, because they're two required registers, and rather than having them separate, because you often find if there's loads of different registers, things fall between two stools. If you have one register that covers everything, it's easier to manage and easier to control.
And just to say there, Ed, as well, which members may not be aware of, LIA, obviously record the CPD for their members, but for their, say, their training officer, whoever it might be undertaking that role in the credit union, they have access to an online portal here where they're able to see their staff's CPD records and their status. So, and they're able to export reports and stuff like that. So just, if they're not familiar with that, they might get in touch with us and we can take them through that,
That's
because because it's there in, now it's obviously only whatever the member has recorded or what we've recorded on their behalf. So if they've done external stuff that they haven't logged, but for the most part, they'd be capturing that, they'd be doing with us there, and we could talk them through that. So, but it's a good source of truth,
That's a great tool to have available, yeah. Yeah, because the League Training, Learning Development Department also have something similar. So the more of that where you can get independent and objective assurance, the better.
Yeah.
So we just go on to the next slide then, which is about the controlled functions. So as we saw in that earlier slide where we had the listing of the controlled functions, they're now, they've now been brought in to ensure alignment with the Minimum Competency Code activities, and they're the ones from 3 to 8. I suppose credit unions need to be satisfied on an ongoing basis that their relevant officers and outsourced functions meet the fitness and probity standards, and this is done through a process of due diligence, and that they continue to maintain those standards either by self-certification or by carrying out checks. If you go to slide 19 there, please. Next slide. So you'll see from this slide that some standards require documentary evidence, while some can be self-certified, including the new control functions 3 to 8. So for those ones, you'll see you can self-certify for conflicts, guard checks, convictions, regulator checks, and judgment searches, and the CRO checks. So they can all be self-certified. But it is important that the fitness and probity policy determines when self-certification suffices and what would determine that a check be completed rather than self-certification. This could be because an individual has highlighted as part of the questionnaire that there may be an issue with one of those areas, and therefore a check is carried out. But the policy should determine, it should be sufficiently robust to allow for that process. We go on to the next slide there, please. So this slide notes what should be included in the fitness and probity policy or other relevant policies to ensure a compliant and standardised approach. I'm not going to read through it. These policies should have been in place since 2012. And this is just a good time to review these policies and update them, maybe to include the updated fitness and probity and MCC requirements. The next slide then, please. the due diligence requirements. Again, I'm not going to read through this slide. It should already be in place. I'm just giving it here for information purposes, as again, it's a good time to review these. And this should already be documented in all your policies and your HR manuals, as management and second line and your CEO would already have to comply with these. But it is a good time to review them and make sure they're up to date before they're provided to the new staff. So the next slides, please. Data protection obligations. Credit unions need to ensure that they retain documentary evidence, either by way of a letter or statement, to show that they provided control function role holders with sufficient information prior to commencing due diligence to ensure that they are fully aware and understand why due diligence has been completed and what it entails. You also need to ensure that the record retention policy includes the retention period in line with requirements for minimum competency and fitness and probity related documents and records. So it's important that your record retention and your standing operating procedure for your due diligence are updated to take account of these data protection obligations. And then the next slide there, please. As the DPIA should already be completed, as the DPIA should already be completed for fitness and probity, excuse me, we recommend that it's reviewed and updated now if necessary. And where one hasn't been completed, we should recommend that one is now completed and put in place. Because I appreciate the DPIA requirements, the GDPR came in after the fitness and probity obligations, so you may not have one. But if not, I would certainly recommend that one is drawn up now, because there's so many staff that it's now going to cover. It's expected that documents should be retained in a secure manner for a set period of time, especially after the officer no longer holds the CF role. This should be kept just to demonstrate compliance with fitness and probity requirements and minimum competency requirements. And the rationale for the record retention period should be documented within the record retention policy. And then the last slide there on the framework documents. So I've listed here a number of policies and framework documents that need to be reviewed and revised to ensure they're sufficiently detailed and robust to protect the credit union and provide a detailed governance framework and operational processes for staff, management, directors, internal auditors, external auditors, and any other stakeholders in relation to the changes brought about by the expansion of the MCC code. So that's it, really. That's the main part of my presentation. But just before I finish, I would just like to thank again Joanne and her team for this morning, and to say that I will be attending the League AGM at the end of the month in Limerick, and we have our stand there. So anyone would like to come over and talk to you about anything in relation to MCC or any other matter, please feel free to do so. We'd love to meet you. And my email address is on the next slide, I think, and feel free to contact me. Yep.
Well, thank you very much. That was a whirlwind, and I think it's safe to say that credit unions have a lot of work to do. And I would imagine it's very daunting for the smaller guys. We do have a number of questions. Some of them cover the same stuff, so just going to rip through some of those, and we've kind of questions that are coming up regularly for ourselves as well, if you don't mind, that we might ask. So the first question we have here is that you mentioned that special committee and credit committee changes are not in place until July. Have they not been commenced in governance changes to the Act that commenced the week beginning the 8th of April?
So as I said, it's either this month or July that the changes are. So some of the changes come in February, there's some changes in April, and some changes are in July. Okay. So it's whichever phase they're in. There's 3 phases. Yeah. Or 4 phases. So
it's not all being done in one fell swoop. No. Yeah. Okay, that's fine. There's a couple of, I think, a bit of concern about the insurances. And so, they're kind of saying, first of all, I just see one here. If a credit union does not provide critical illness insurance as part of LPLS, do they need a qualification in insurance?
So it's insurance rather than assurance. So if your credit union just covers the loan cleared upon death, they don't provide the the other, if it's just upon death, then that's life assurance. So the CUCF function there, the 07 or 05, sorry, is for insurance. So if insurance is when you're alive, assurance is when you're dead.
Okay, so depending on that, it's really that's like
yeah,
insurance alive, assurance dead, and
and
depending on what you're dealing with. But if it's
yeah,
assurance, they're saying, is it within scope?
we're all assured to die, so assurance is death. So the CUCF function says insurance.
Okay. Yeah.
Insurance. So that's what you're insuring yourself in case something happens. So if there's if you have any queries on that, you can certainly
yeah. So like death only cover a qualified person.
Yeah. So death only would be for, that's life assurance.
Yeah.
Which is the CUS function is insurance.
Yeah. So it's outside scope in that regard.
Yeah.
Okay. And somebody else is asking, does new entrant and supervisor apply from 2024? So somebody coming into the industry, they need to be progressing towards a qualification, I assume, and they need to be supervised while they're doing that. Yes.
Yes.
So that's the 1st of October this year. Does changing of rates count as a new product?
Yes, if you're amending rates.
Yeah.
So if you're amending the rate, you're changing the product. There's change to that product and the design of that product. So that should go to the new product development committee to review, because they have to. They should be, and even outside of this, they should be reviewing the rate to ensure, that it's sufficient to cover costs. That that it's not, they're not too high, they're not too low. That all that should be done. They should be risk assessed, all of that, and then approved by that committee or body, and they make the changes to the policy, and then the policy goes to the board. So they've approved that change, then it goes to the board as the oversight, and they review it and say, yeah, we're happy with that, or they give the final stamp of approval, seal of approval. But it's actually approved by the committee.
Okay.
Any change that has to go to those committees, any that's going to change the design of a product.
Yes.
So interest rate, terms, all that sort of thing, or anything about a new product either.
And so, qualified people are required.
Yeah.
Perfect. Okay, we have a query. So there's 8 categories under the minimum competency, as we know. And can you map to the CUCF rules? Like the person wants to see, is the insurance part, so the LPLS, is that being caught by personal general minimum competency category, or what category are you guys classifying that, like from the central bank's rules? Like, if they're doing insurance products, is it in?
Yeah, so it's under the CUCF 8. So it's for minimum competency requirements only.
Yeah.
This is that's how it's been brought in. So it's not for it's not like the paid insurance for the other CUCF roles for insurance intermediaries. It's not that.
Okay.
It's only for minimum competency requirements. So they are insurance officers for in or whatever role they are in helping a member in filling in the form or for a claim for insurance. It's only the insurance, not assurance.
Okay. So Katie, could you pull up that slide again just for the table, so that while we're going through these questions, people will have access to or can view that table while we're talking about, if that's okay. Okay, we have somebody else, Ida.
It's up near the start. Sorry, Katie.
Yeah,
it's up near this front. It's way up.
3 or 4, something.
I think slide 5 from memory, but I could be wrong.
This particular individual has a successful student program, summer and weekend work for 3rd level students, and internships through 3rd level colleges. And they're wondering how they'll be able to continue with these.
Well, I'm not sure what roles these students would have in the credit union. That's the slide there. But if they have any role that's now in scope, they would need to be qualified.
Yeah.
Or on their way to attaining a qualification.
Yeah.
Signed up for one. I'm not sure what if they're just doing cash. I don't mean that to be disrespectful. If they're doing cash and they're not taking loan applications, excuse me, and they don't take any loan applications, then that's fine. But they can't pay out a loan.
Yeah.
So a teller, they can still take in payments and that sort of stuff, but they just can't. They can open a new account if it's permitted. They can take an application for an
Mm,
account if that's within their rules or in their policy. They can do that, but they can't open a deposit account.
yes.
They
Okay.
can't fill an application form for a loan, but
Yeah.
they can do teller duties.
Yeah. Yeah.
So it's only roles that are within scope that they would have to be qualified for or on the way to attaining.
Yeah. Okay. Thank you for that. So we have somebody then asking, is the credit union, the CUA, the LIA designation or qualification sufficient? So at the moment, that only is applicable for those acting as insurance intermediaries, but we are making a submission to the central bank to have it recognised retrospectively and into the future with some amendments. So work is ongoing with the central bank on that, and LIA will be in touch hopefully very soon on that. So, if you could just hold fire on that and stay in touch with us. But as soon as we have word on that, we'll be in touch with you. Okay, somebody else is asking, am I right in thinking that the requirements for new employees to be supervised are being removed from the 1st of October? I'm assuming that's incorrect.
I would have to say I would have to come back to them on that.
Okay. Um, okay, well, I assume though new entrants into the industry, they need to be supervised on, they get a qualification.
Yes, if they're new entrants, it's my understanding that they do
Yeah,
have to supervise. I didn't think there's any change to that. I
no.
didn't think that was being removed.
No, I can't
But
see it being removed, to be honest with you, because I mean, thing about it is if they're bringing in MCC from the 1st of
yeah,
October,
yeah,
supervision has always been part of that until while they're attaining their qualification.
yeah. So
So it'd
it's
be
it's just the
completely contrary.
supervisors.
Yeah,
Yeah,
yeah, yeah. Okay.
and that might
Yeah.
be in relation to, I'm assuming, for a board or volunteer members on committees, maybe is what they're trying
Okay.
to talk about. In which case, if, say, for example, a new board director um, or volunteer goes on to the credit committee or credit control committee or whatever, and they
Mm,
do want to do the qualification they started, they're supervised by the other members of their committee.
mm,
So
mm.
that would be okay.
Yeah.
But it is my understanding that supervision is required.
And so therefore, if it's not in relation to, like, I think we pretty much know the answer in relation to staff, let's say, that are dealing with in-scope activities or
Oh,
anybody
they would,
that's
yeah,
dealing with in-scope
yeah.
activities as such.
While they're attaining their qualification, they
Yeah,
will be supervised
yeah.
by
If
their
if
supervisors or their head of lending or whomever.
yeah, and to that person who asked that question, if that's something different, just email us in. And if your question is something different, then we'll get you the answer on that.
And to be honest, in operational practice, that's what you would do anyway. If you have a new
Yeah,
loans officer coming in, they're always supervised. You don't
yeah,
let them off the first day and let them off run. You know what I mean? They're
yeah,
always supervised
yeah.
while they're learning the ropes and understanding how lending works and all that. So it would always be, despite regardless of MCC requirements, it would usually be the case that any new member staff is supervised until they're
Yes, of course. Yeah,
yeah
ready to be let loose.
yeah yeah.
Okay, we've a gentleman here asking, could you go over the product development slides? Having something like a product development team, how does this tie in with the functions of the board, which is responsible for the overall control and management of the credit union? And can the board just take the recommendations of the product development committee? And if they do, are they fulfilling their role and are they coming within the minimum competency requirements? So that's a biggie.
Yeah.
So having something like a product development team, how does this tie in with the functions of the board, which is responsible for the overall control and management?
So it's an in-scope activity. So therefore, the requirement states at least one person, one key person meets the requirements. So if one person or key person on your board is qualified, your board can be that committee. That's
Mm,
it, if you want them to be.
hmm
But because a lot of boards will not have qualified people,
hmm
this new product development committee will do the in-scope activities. They will design and develop the product. It'll be approved by them, right,
Okay,
as the in-scope activity. The policy is the framework document to support the activity, the
okay,
new activity.
okay,
So the board will be approving the framework document. The development of the product has been approved by the committee. I hope
okay.
that makes it more.
Yeah, yeah. So really, like, once this committee are operating within the framework that's been approved, and that the committee, the product development committee, have somebody that's qualified or are qualified to be doing this, they're covered.
Yeah. So if you're somebody on your board, the board could be the committee if you want them to be.
Yes.
And if you don't have anybody on the board, then you set up this new committee and they do it. And the board members can be on that committee, by the way, once because
Mm-hmm.
there's no reason why they can't be. Um, you can have board members on that committee for sure,
Mm,
with other members who are qualified, and then they do the in-scope part of it. So they do the design and development of the product, and they approve that in line with the policy. And
mm,
then any policy changes to where if it's credit policy, the credit control policy, the savings policy, whichever policy, and it's only the policies that are relevant to the MCC. It's only policies in relation to lending and term deposits, mortgages as well,
mm.
actually, um, that need to be done this way. And then
Okay.
they go back to the board with the revised policy for their oversight and approval.
Okay. Okay, thank you. What happens if you recruit someone going forward? They obviously have to attain a qualification in whatever time is left. What about people post 2028? So I'm assuming, therefore, like this is an ongoing thing. Like the door doesn't close in
Oh no,
2028. So if they are recruited, say in January 2027, they have 4 years to do it. Is that correct?
well,
Have they said yet that there's a time frame within like normally for all other minimum competency, there's been a time frame given from the time they're a new entrant in, they have a specified period of time to get the qualification.
that has been specified, but I would
No,
imagine that would be the case. That is my understanding, but that hasn't been specified.
yeah,
But this is going to be an ongoing thing, so you're going to have to
exactly.
allow people to attain a qualification. I
Yeah.
think it's 3 years. I don't know what it is normally,
It's
but
four
and I
years normally,
4 years.
4 years
That
normally.
yeah, and that hasn't been specified as of yet, but I'm sure it will be.
Yeah.
It could, it could,
They're
maybe it's
going to have to
intended,
give them a time
but
frame.
they're
So
going to have to give that
yeah.
time
And they
frame.
and they will say like that individual, just for that person that's asked that question, yes, they'll need to be registered for an exam and seen to be attaining it and seen to be being supervised, but and they'll have a set period of time, which I'm sure CBI will come out and say what that is. But like under the general minimum competency, which this is falling under, it's 4 years. So I mean, I assume the central bank are just saying same rules apply,
Yeah,
you know? Yeah.
yeah.
Okay.
Sorry,
Somebody,
sorry,
yeah.
just Joanne, because that would be the case if you're insurance intermediaries or if you're mortgages. That's what it is. So I'm assuming it's just
Yes.
going to continue that way.
Yeah. I mean, I think what they're doing is they've literally just brought the credit unions within scope
Yeah,
of what's
yeah,
already existing. So
yeah.
the same rules that are there already, that's maybe why they haven't specified it specifically credit unions because it's under a minimum competency. Um, Somebody else, can I clarify whether our insurance officer falls into scope if they are dealing, sorry, these are the same sort of questions, sorry, that they are dealing solely with DBI claims and LP claims after the member has passed. So that's assurance, we're saying.
Yeah, so death benefit insurance is assurance, is, the members, that's assurance. And if they're died, that's
It's out of
assurance.
scope.
The scope there, you can see it there on the slide. It's CUCF5, assisting a member of a credit union in making a claim under contract of insurance. So the contract insurance would be LPLS, where they provide for the members' incapacity. And a lot of credit unions claim for that.
Yeah.
You'd see a lot of claims come through for that.
Okay. We're talking about the LIA designation. Does somebody dealing with LPLS need? And I'm just going to get back on that to double check it to make sure that we're giving you the right information there. So, let us come back to you, Tom, on that, and Judy just on the correct designation, because I mean I see we've all the control functions here, but we don't want to give you the wrong steer on that. Will credit unions be expanding its service and product offerings going forward?
Sorry, say that again?
Will credit unions be expanding its service and product offerings going forward? So that's a bit,
Well, that's up to each credit union to determine.
yeah,
I'm not sure what that is in relation to. I'm not
yeah.
sure. Is that in relation to the amendment, the changes brought up in
I
the
don't know.
Amendment
That's
Act
all it
and
asks.
corporate
So,
credit unions? So I don't know.
mm,
I don't think that's within the scope of this
no.
webinar, to be honest.
Okay. Is the committee for product design a requirement or best practice?
It's best practice because the requirement is to meet the requirement is the MCC requirements, minimum competency requirements. So to ensure that you have a process in place where you have ongoing, where you meet the requirements on an ongoing basis, it's better to have the committee. Because what you don't want is the board meetings been taken up with all of these, because product development is now going to take more time.
Yeah.
So rather than that happening at board meetings, that you'd have a separate committee. Now, if the board have sufficiently qualified staff, they might have as a full a committee made up of just board members, so a subcommittee of the board, or as a separate committee with maybe members of management on it or whomever and board members.
Mm,
But it's not a requirement. It's just to assist with implementing
yeah,
the requirements, the MCC requirements.
yeah. So I think you've answered that there with this question here as well. Does the one qualified person requirement on the project development committee also apply to other committees such as credit committee or credit control committees?
No, it's just that one. That the one person is exemption is just for the new product development.
Okay,
For every other committee, it's the full committee.
okay. And can I clarify, if one person on the board is suitably qualified, then the board can be the committee and are covered for new product design. You said that.
Yes,
Yes,
yes.
so the answer is
But I would
yes to that.
recommend that they set up a separate committee of the board, so they're not taking board time with that,
Okay.
and you're just bringing the high level information back to the board.
Yeah. Okay. Quick one here for us. Is the QFA investment module the appropriate option for a savings qualification? Yes, it is.
Yeah,
So, and I mean, in terms of the savings qualifications, like what they've said really is loans, but it's term deposits greater than 1 year that you would need the investment
yeah.
qualification. Yeah.
Term deposits in excess of 1 year.
Yeah.
1 to 3
Great.
years are the time frames the credit unions have to term
Okay.
deposits for.
Great. Okay, so again, there just have to be one qualified person on the project development committee
Yeah.
or the board. Yeah. So we've answered that. Um, okay, so we're just seeing here, again, in relation to your product development committee, would there be a requirement to have at least one director, or can it be all operational?
It can be all operational,
Mm,
absolutely. That's for each credit union to determine.
yeah,
Once one key member meets has the right that the sufficient has is
yes,
sufficiently qualified, at least one key member.
yeah,
So it can be all operational, or it could be a hybrid committee of board members and operational.
yeah. Okay. Okay, so we're very close to our time. Just to say, we've a couple of questions there that we'll get back to just in relation to the designations for dealing with the actual insurance aspect of it. But also to say that the slides will be provided after the event. If you do have any other questions, please submit them and we'll do our very best to answer them. I would like to take this opportunity to thank Edith. She's a mine of information, and where she gets it and understands it all is beyond me, but well done to you. But
Thank
it
you.
is, we're there, like it is a big undertaking and we appreciate that. There's a lot to be done. If we can help at all, let us know. As I said, we have the credit union relationship manager out on the road. Give us a shout if you want to link in with him to do any sort of mapping. Um, the CPDR, once again, you've 1 hour for this event, and that will be added to your record within the next 48 hours. Thank you for the huge numbers that attended and stayed online. Clearly shows the need for this information, and would certainly be linking in with Edith again for more information if and as when it's needed. So well done, Edith. Thanks for all
Thank
your
you.
effort in putting that presentation together, and thank you to everyone for being with us this morning.
Thank you
Bye
very
bye.
much. Thank you.